Hey everybody, what's going on? Welcome back to the channel. This is our watch list for Tuesday, August 22nd. I put these watch lists out for you guys for free every single day. So thank you for tuning in. You hit that subscribe button and you hit that bell. That will make sure you guys are notified for when these videos actually come out. So like I said, I put these videos out for free every single day. I've also got a plethora of learning tools for you guys, over 100 learning tool videos to help you guys learn this strategy, the Strat, created by Rob Smith, RIP Rob. Now, if you guys have never seen this strategy before, I want you to throw out everything else you've ever known about any strategy before, because this one is going to change the way that you guys trade. It's simpler and easier than probably most of you have ever seen. It's we don't really use indicators. We basically are using what the candlesticks tell us, and that's it. That's it. It's very, very simple. We're going to go through a bunch of the setups, how we determine what we buy, what we sell, when to sell, what these candlestick numbers mean right here, and what these arrows and these letters mean right here as well. That's if you're new. If you've been with me for a while, then you already know. Okay, so let's get started on this list. Before we do, though, the screen you see, that is TradingView. If you are new to day trading, swing trading, or you're looking to get into it, and you don't have something like this, you're going to need something like this. So in the description down below, there is a link for TradingView that will give you a free 30-day trial to their sub-based services. And then if you actually decide to use it, you get up to $30 off of your subscription, depending on which one you choose. But you need to start out by clicking on that link in the description. You can do that after the video. On to the list, CVS. Okay, so for the newcomers, we've got the candlesticks, the ones, the twos, and there is a three, but right now we've got a 1 and a 2. So the two candles, they are directional candles. They only break one side of the previous candle. So this candle here only broke one side of this candle right here. That's the previous one. It only broke to the low. So we call that a 2 down. If it broke to the upside, we call that a 2 up. It's very, very simple. So we have a 2 down, but we have a 2 down that finished green. That means the buyers bought it back on the day. Okay, so when we have something like that, I like to say that there is more probability, based on this being a 2 down green rather than red, there's more probability that this is going to trend back up on the following day. We call it a 2-2 reversal. So we're going to look for triggers here at 67.17. If you follow these lines across, you'll see the numbers right here. That's where I'm getting those numbers from. So our trigger price, we don't get into this thing until it triggers past that line. Once it passes, you get into the trade, 67.17. If you're buying options, I would look for a 67 strike or a 68 strike. I wouldn't be going anything higher than that, but you can go lower if you like more in the money. And then we mark out our targets. Our targets just go to the high of the preceding wick, the previous wick. So here, and then the next high would be right there. And that's how we do it, guys. It's very, very simple. If this is a little bit foreign to you and new, and you think I'm speaking a different language, go check out the learning tool channels I have on my YouTube channel, okay? It'll walk you through all of this stuff. Let's move on to Starbucks. So Starbucks has a 2 up. Remember we talked about the 2 down? This one here is a 2 down that finished green. Well, this one went up and it reversed. So it didn't hit target. So here's the game where we talk about why you heard me say probability. So every trade that we look at, every strategy, whether it's this one or something else, everything we look at is always based off of probability, because we never know what the next candlestick is going to do. We didn't know this one wasn't going to hit targets. We didn't know it was just going to tick up and then trend back down for the rest of the day. We didn't. There's no way of knowing that, okay? So that's why we say we base it off of probabilities. When we have a 2 down that finishes green, we look for the trend to come back up. Now we have a 2 up that finished red, the exact opposite. We're going to look for this to trend down. One thing we have in our favor here is what I mentioned earlier, time frame continuity. These arrows are telling me on every single one of these time frames, the hourly, the daily, the weekly, the monthly, the quarterly, and the yearly, there's sellers everywhere on Starbucks. Okay, so that gives me, again, a higher probability, a higher chance that this is going to trend down. And when you start looking at trading as a game of probability rather than winning and losing, it's going to change your mindset when you're looking at this stuff. Now, it's easier said than done, obviously, but this is a game of probabilities. It's a business of probabilities, and that's it. There is wins and losses, but They're based off of probabilities, and they always will be. No plan is 100% foolproof unless you're Nancy Pelosi. That is Starbucks. So we've got the full time frame continuity. I do have a video on this. I will put it at the end of this video so you guys can click on it and watch it if you don't know what time frame continuity is, or it's in the Learning Tool video playlist that I've got. We move on to XOP. So XOP, same thing. We've got a 2 up that finished red, so we're looking for this to trigger down. Here's the thing about XOP. You notice that pink line? That's telling me that we've gone 2 up on the week already, but we started to trend back down. Now, what's very interesting here, if we go back to the daily, this purple line, part of my strat indicator that I created for you, gives me the 50% marker of the previous candle. This is a Sarah Strat sniper rule. If we cross below that line, there's a very good chance that we go outside bar, which is a 3 bar. You haven't seen one of those? It breaks both the high and the low of the previous candle. So outside bar on the week, okay? So if we trigger and start trending down, there's a very good chance that throughout the week we just continue to trend down on XOP. CVX 2 up red. We're going to look for puts here at 159.45. You see another pink line there, correct? At the bottom. That is for us to go 2 down on the week. So we are currently trading inside bar. Now, if we trigger on the daily, we're back to the daily chart. If we trigger and hit first targets, that is our, if you watch the weekly swing trade video, that is our trigger to get in on a weekly swing. So depending on when your expiry is on Chevron, you might want to take this thing a little bit longer if it hits targets throughout the day. We move on to eBay. eBay inside bar. So we talked a little bit about these, but the inside bar or 1 bar. So again, these candlesticks are numbers are part of my indicator. The yellow inside bar, the white outside bar, the Sarah Strat Sniper 50% rules on the candles. This time frame continuity, all part of my indicator. You can get it for 25 bucks one-time fee, or it's part of the Griswold Gold membership. I'll talk about that a little bit later. Okay, so inside bars, when you see these things, guys, I want you to think of a spring being loaded, compacted, squished. And when we run into these, once you let the pressure off of that spring, you expect an explosion. So off of this inside bar, we had this big run down right here. Okay, that's what we're looking for. Does it always happen? No. Sometimes we get these little tick ups, but it did hit targets. We get these little tick ups and then it'll reverse on us. Here's a double inside bar. It ran down. I'll look for one more inside bar here. There's a 3-1. Here's another inside bar, big gap down. Here's another inside bar, big run up. So that's the probability. It's very high. And I always tell people if you're struggling with trading or you're new and you're trying to get the patterns down of the 2-2 reversals, I always tell people to concentrate on the 1 bars, the inside bars. You can play them to either side. And again, probability-wise, for the most part, they work out. Okay, so that's the inside bar. We look for calls at 43.26, puts at 42.76, and the targets are just like we talked about earlier. If you're going to the downside, it's just the low of the preceding wick. If you're going to the upside, it's the high of the preceding wick. This one's pretty tight. The next 2, 3, 4 are right here. So that's eBay. We move on to Disney. So Disney also has that inside bar. We look for those calls at 86.25, puts at 85.41. Now, when I'm trading, guys, these are the only 2 that I'm looking for. So my bread and butter over the past, year or so has become SPY, setting these triggers and targets like we're looking at here on the 15, and then managing on the 5. You should always be managing on a smaller time frame just to manage and mitigate your risk. So when we're looking at this, again, I only need these 2 for time frame continuity in the direction of my trade. But if I have more, again, all it's telling me is that there's a higher probability that trade works out. I don't need these ones, but it's a higher probability. It doesn't mean you don't trade based off of that. You can take all these continuity indicators that you like in your favor before you trade. But for me, I don't need it. I'm not in a trade usually more than 40 minutes. So the hourly and the daily work for me. Everybody's going to have a little bit different set of rules. If you want to follow mine and what's helped me be successful as a trader, that's great. If you have your own, that's also great. Okay, so we look at DocuSign 2 up red. We're going to look for this to trend back down. Notice the time frame continuity again. the majority to the downside. So we can look for puts here at 47.60 and first targets at 46.70. On to Etsy, 2 up red. Again, notice the time frame continuity there. Full right across the board. We can look for the puts at 73.05. And let's mark out this target together, and we color it green because my targets are always green. There we have it. There's a setup on Etsy. And again, guys, I will mention this. As part of the Griswold Gold membership, you get the top 5 setups from here, the ones that I think have the best chance of playing out. And that membership is $50 a month, or you buy 2 months, you get a month free. It includes that top 5. It includes this indicator. It includes one-on-ones with me. And more importantly, it includes a 1-hour strat course that takes you from the beginning right until the end. And it really helps you. Instead of searching for videos, it'll take you right from the basics, where we go from the candlestick numbers to the setups, how to get in, how to get out, how to manage, all that kind of stuff. So it really is good value. I'm not in this to make money. I'm just in it to pay for my time that I'm putting out there for you guys. And speaking of that, if you're watching the videos and the ads are popping up, please let them roll through. Allows me to keep these videos free, so thank you for that. IWM, 2 up red. We look for the puts here at 183.07. Time frame continuity in our favor. And I'm going to check this out. This purple line is what I mark for my 3-month setups. And we are trending back down through this inside bar. So we'll see if we hit this and close past this 50% mark on the inside bar. And that'll tell us, or give us a pretty good idea of if we're going to go outside bar on the 3-month chart. It's all fractal. It's like a domino effect on all of this stuff. So the week, the day triggers the week, triggers the month, triggers the 3-month, triggers the year. It's just a domino effect. So we look at Procter & Gamble here again. Majority of the time frame is to the downside. We've got an inside bar, so we're looking for that spring action up or down. Calls at 152.78, puts at 151.26. Pinterest, I'm going to take off of here because there is no setup. We look at Walmart. Walmart has that double inside bar. So again, we talked about the single inside bars. Let's go look at the double inside bars. It just means there's 2 straight days of consolidation, not really knowing which way this thing is going to jump up. We're stuck inside this outside bar. Some people call it a mother bar. So we're stuck in there. How are we going to get out of it? If we go back and look for a blue highlight, that's part of my indicator as well, as is this gold highlight here. These gold highlights mark the 3-1 setups. The blue highlight the double inside bar. Super rare. We have to go, how far back do we have to go before we find one of these things? This is how rare they are, but they're super, super explosive for the most part. So this is a triple inside bar. Okay, so 3 straight days of consolidation. Didn't work out the way we probably would have planned it. Okay, so it ends up being an outside bar and kind of a dud of a setup. If we trended up first, you would have hit 3 targets, which would have been successful. Downside, hit 1 target. Okay, so hit targets on either side. I'm going to see if I can find one more of these. And again, transitioned into an outside bar again. But these, ladies and gentlemen, are the probabilities. Nothing, and I'm glad those didn't work out, because it shows us that probability-wise, it doesn't work out. For me, what it's telling me is Walmart has a very high success rate of going outside bar off of double inside bars. So if we start trending up tomorrow or trending down and we start coming back through the 50% mark of this inside bar, it's very, very likely that we go outside bar on Walmart. It's all probabilities based off of past tense scenarios. Okay, so Spider, SPDR, Healthcare, ETF. We have a 2 down that finished green. And here's another thing that we're going to talk about. So in the strat, there are 3 actionable signals. This means high probability setups. There's hammer candles, where we have this body at the top, a long wick to the bottom that's about 2 times the size of the body. That's an actionable signal. A shooter candle, it's a bearish pattern where the body is at the bottom and the wick is at the top. That's an actionable signal to the downside, or an inside bar, which we've already talked about, are also actionable signals. So on XLV, we look for calls at 133.83. On to Airbnb, 2 up red, time frame to the downside. So we can look for the puts there at 123.49. BIDU, we'll see if we take this back to the upside. We can look for calls at 125.30. I want to show you something here. First target goes there, obviously, like we discussed. Let's get rid of these. And let's put in a second target. Where does it go? To the top? No. To the bottom. Okay? And there might even be some intermediate points depending on... Doesn't look like it. So, why does it go to the bottom? The reason it goes to the bottom is there is no candlestick between here and here. There's an empty gap. It's what we call a gap. So we have to fill that gap. So in order to fill that gap, which stocks tend to do, that becomes our target. And then the next target after that would go back to the top. And then again, let's fill that gap right there. Okay? CCL, 2 up, finish red. Really good time frame continuity. We can look for the puts there at 15.50. And again, if this trends up, that's okay. You don't need to touch it. Okay? We're only looking to get into this stuff if it triggers our trigger point that we've put in. Okay? And it's really that simple. Datadog, 2 up red. Here's that shooter candle we talked about. We can look for puts there at 94.23. Ford Motor Company, 2 up red. Time frame in our favor. Puts at 11.87 with the trigger point. Inside bar off of the Google machine. Okay, calls at 129.26. Puts 127.16. Last time we had an inside bar, we went outside bar. But we had this inside bar, big run down. Okay, so again, we look at the probabilities of these things working out, and it's high probabilities. That's why we talk about it. That's why we teach it. That's why we use them as signals to get into trades. Okay, we look at lift, inside bar, hammer candle. So calls at 11.21, puts at 10.75. We are also close to going 2 down on the week here. That's what that pink line represents. If I go to the weekly chart, there we go. We're looking to go 2 down on the week. See how that one plays out. PayPal, 3-1 setup. Okay, so we talked about that gold bar, the 3-1 setups. Again, these are not very common setups, not common patterns, but when we get them, this is what we expect, these big jumps. Okay, we want to see those. That's what we're expecting. See, outside bar, inside bar, a big jump. Okay, one more. Outside bar, inside bar, big jump. We trigger, we target. And that's it. No more targets. So you'd have to find somewhere in a reversal to get out of that trade. But that's it, guys. This stuff is very, very simple. We go into Roku, and I'm not saying it's simple. Like, you need to learn it and study it and put the time and effort in to get it. But once you've got it, guys, I always use the analogy of a plane taking off uses 60% of its fuel, but once it's in the air, it's pretty much gliding, okay? And if you're new and you're struggling, that's where you are. You're taking off, okay? You're taking off on your journey. You're getting ready to get up into that sky and just glide until you hit your final destination when we're all done, okay? When you're ready to quit the game and spend the rest of your life in happiness. So Roku, inside bar, calls at 79.99, puts at 77.35. XOM, there's a 2 up red, so we look for the 2-2 reversal back to the downside. Look for puts there at 108.14 on XOM. And that's the list, guys. I appreciate you guys watching. Like I said, you can find me on Twitter at Mr. Clark Griswold. Please, if you liked the video, give me a thumbs up. If you thought it sucked, let me know in the comments. Comment anyways. Let me know what you think of the videos. If you want more of them, I'm going to do them anyways, but let me know. Questions, you can leave them in the comment section on Twitter. Join the Discord. The Discord's free, guys. It's free. Okay, there's plenty of rooms in there. It's free to join. The link is in the description below. It's free to join. Like I said, there is a paid membership. You're not obligated. Okay, there's no obligation. Join for free. If you need the extra help for one-on-ones, the course, the live trading bots, which I didn't mention, you get those as well. Okay, all that good stuff for one low, low price. Okay, thank you guys for watching. Good luck trading on Tuesday. I wish you nothing but the best. I'll be around on the Discord and Twitter tomorrow. So reach out, say hello. We'll see you all in the next one. Bye-bye.